Good afternoon, everyone. BC Richfield and Razoon here. I'm coming to you live from London. It's just gone 4 p.m. UTC. A huge shout out to everybody that's joining the stream today. You can see loads of you who have been waiting and even more on Twitter. So welcome. We got a really cool show coming up for you today, guys. We're going to talk about trading triggers. Okay, so not just using technical analysis to find key levels, but what we do when we get there. All a part of breeding successful habits as a trader, okay? Now, I've got my boy Razoon here as well. We both look at the charts in similar but also very different ways. So we're hoping to share with you guys a little bit of that alpha today. So before we crack on and tell you exactly what we've got in store, let's have a quick word from our sponsors.
Milk Metaverse is a metaverse platform for the media industry that will bridge the gap between the content producers and the audience. Mediaverse from Milk Platform will be a combination of virtual reality, blockchain technology, and artificial intelligence. Visit the website metaverse.milk.global.
Hey everyone, welcome back. So we've got a really exciting episode today. We're going to look at triggers, okay? So what happens when we interact with these key levels? Now, what we want to start with is bias as well, okay? So for me and Razoon and any professional trader, we want to be trading with a trend, right? So we want to find higher time frame targets, and then we're building our strategy and our approach around that. So what we're going to do is we're going to look at bias, we're going to look at how we set targets and levels, then we're going to go into our trigger mechanisms for those. We're going to talk a little bit about then how you build consistency as a trader and looking towards becoming a professional trader. And at the end, we're going to leave you with just a nice little golden tip. So before we crack on with the rest of that, let's start with bias. So Razoon, if it's all right with you, I'm going to share my chart, buddy, give them a little top down on what I'm looking for, and then we're going to pass over to you and you can drop the alpha for the people as well. Sound good?
Yeah, sure, man. Go for it.
Awesome.
Yeah.
So I'm just starting you guys off here with a daily chart. And guys, do let us know in the comments, please, if there's any issue with the audio, any issue with the video. And then also as well, if you want us to pop our faces off the screen to give you a bigger screen, I know we've got a lot of people watching on Twitter, please do let us know. What a legend, some serious alpha incoming. I hope so, buddy. Hope you enjoy it. Thanks for joining the stream. So for me here, and I'm going to start with recent price action, it's very, very important that we have a bias, right? So what I'm looking for is I'm looking for liquidity sweeps, right? And as I've said before, I'm looking for them on all time frames. C-Ron, MM, Hangry Patrick, hey guys, thanks for the comments. So for me, what I'm saying to myself here, and let's look at really, really recent price action. So if we use this on ETH, just as an example, we see our daily structure here, right? Now, what I'm saying to myself as price is breaking down here is as price breaks down, I'm looking at these levels over here. And let's just take this here, and we're just going to use a box to draw between those. So that's taking the low of the liquidity there and the liquidity that's here. Now, as we come into this level, and obviously we would look to check this on different time frames as well, then what we're doing is we're breaking down, we're coming into here, we've clearly got a reaction. The other thing that we want to note is that we've swept the liquidity here, right? So we can see how when we set this low, we've had this swing fail, price has tried to move beyond it, it's failed, it's then come and closed back within the range of this candle. Then we're saying to ourselves, okay, well, what could be drawing price higher? So for me, I'm looking for untapped liquidity, which would be above these highs here, all right? So we'll take the extreme of that. Just going to label that up as our liquidity. And then I'm saying to myself, well, what's drawing price there? And what we can see is this inefficiency here. So this inefficiency here, these often act as magnets for price, pulling price up towards the next point of liquidity. And in our theory, if we're saying that price has now run the liquidity down here, yeah, so the liquidity of the lows or the sell side liquidity, well, then we're saying is what's price going to search out next is going to be the liquidity of the highs, right, or the buy side liquidity. So our bias here remains strong. And as we look at this on a daily scale, as this candle opens here, what we want to see is for the day to open, price to trade down. Then when we break structure on the lower time frames to the upside, we're then searching out the next liquidity. So for me, I'm first of all looking for the liquidity above this high, then this high, and up here as well, which gives us these relative equal highs. So for me, the way I'm looking at it is that price is being drawn up to these levels to find enough liquidity to fuel the move down. So when we go on to the lower time frame shortly after Razun introduces what he's looking for, then what we're going to do is dive down into the charts and say to ourselves, okay, if that's our bias, then what does that break down to in terms of trade setups? So, Razor, I'm going to bring you in on this. I know you have similar views, but some really, really awesome ways to look at this as well. So, please go ahead, my friend, and drop some alpha for the viewers.
Yeah, thanks, man. Like such a great opening there.
Thank
Yeah, as you said, I also use the same approach as my friend Richfield there, but maybe one small difference is that I kind of like to always look at like kind of more data. Okay, sure, it brings more noise as well, but for example, the thing that you did on the weekly, I kind of like to do on daily. Maybe this is a slight like difference between our way to look at the price action.
you.
And yeah, so on Bitcoin, for example, if I start with the plain chart, I always look for so I always like to think that market is ranging.
Hmm.
And uh, like for example here we've got an obvious range. And uh, yeah, like this.
Hmm.
And yeah, sometimes it's not so obvious, so and it's gonna be a little bit more complicated, but we will reach there, I think, in this webinar.
Hmm.
But yeah, like you explained, the levels of liquidity that was below all these lows. Okay, we're now trying to like in a liquidity grab phase. If it's enough for a upside move, sure, we're gonna we're gonna get a deviation, like, right? And a pushback into the range triggers my entry here on lower
Hmm.
time frame, of course, and then I'm targeting the like the mid range and the range high.
Hmm.
And as you said, you mark this level as a level of liquidity. You can see how, you know, beautifully it's lined up with the median range, right? And and of course inefficiency here, right? So a lot of like a lot of similarities.
Hmm.
But yeah, I think we should a little bit like go faster about it and just reach the real point that we're gonna talk today.
Hmm.
What do you think?
Awesome.
Yeah.
So, I mean, while you've got the charts up, then why don't you kick us off with the next point, which is like your key levels and targets? I know you've kind of covered these already for what you're looking for because you've
Uh-huh.
broken it down in such a beautiful range, right? So it makes it look really, really clean. But as you
Yeah.
said, you're looking for liquidity above the highs. Now, for some of our viewers, the term liquidity is very broad, right? So what we're looking
Uh-huh.
for is we're saying that price is on this kind of never-ending journey for liquidity, right, and for balance. When we see
Yeah.
imbalances on charts like Razun just pointed out with the fair value gap or the inefficiency, we expect the market to fill them. Now, we're not saying that they get filled right away. These things can take, days, weeks, months, years, some of them, when we look at the higher time frame charts. But what we're doing, we're using them to play into a strategy to tell ourselves a story on where price is going. So, in terms of your kind of key targets and levels here, Razor, you were
Mm-hmm.
saying that if price steps back within the range, yeah, then your
Mm-hmm.
natural assumption is that that's showing strength. Yeah.
Yeah. Yeah.
So then with targeting, what are you looking for? Are you looking for the mid range first because you've got the liquidity above there and then eventually
Mm-hmm.
the range higher?
Yeah. So it's interesting that in this range that we're having right now,
Hmm.
it's lined up so perfectly with everything. I think it's a beautiful range.
Hmm.
The median range is lined up with this liquidity point. But if it was like lower, I would target this first. Okay,
Hmm.
you get what I mean?
Yeah.
And one thing that I like to do, especially when I'm doing like swing trades on higher time frames, for example, if I were to like if I get the a trigger here and I want to long Bitcoin targeting the
Mm-hmm.
range high. And so basically the range high is the liquidity resting above here, because
Mm-hmm.
we as like price action traders want to assume that everybody who shorted here, or maybe even here,
Mm-hmm.
and like with like great sizes, their stop loss like are resting here, right?
Mm-hmm.
And we like to assume that their stop losses are gonna be the liquidity for the market to move. And I think like uh, people sometimes kind of confuse the term breakout and liquidity, because to be
Mm-hmm.
honest, like it's so easy to get confused when we're like grabbing the liquidity or
Mm-hmm.
breaking a level. For example, here, um, short, there's a setup for a short, a continuation short, right?
Mm-hmm.
Like from here, maybe like to lower. But
Mm-hmm.
I'm not really a type of trader to do that because of like several reasons. First of all, I don't have a good target, right? And I don't use the tools to predict the targets, like the I don't know, negative Fibonacci's or
Mm-hmm.
Fibonacci
Extensions there.
expansions, yeah,
Yeah, yeah.
and stuff. I used to do them, use them, but I don't really do it right now. But uh, but what I'm waiting for here is actually a long, and this is a like a method that people are usually have problems with, because they say we're losing a level, we clearly have a breakout, it's range breakout, which is really obvious why you're
Mm-hmm.
looking for a long setup. And my answer always is I want to see like more strength for price
Mm-hmm.
and a pushback. Then about targets, when I'm trading the range, as you know, and I've said on like a lot of places, I like to use volume profile, and the
Mm-hmm.
point of control of the range is always a take profit for me.
Mm-hmm.
Okay, so sometimes I do on the value area low and high. By the way, we're not going to explain every tool today.
Mm-hmm.
But people, but if people want to know more about them, you can definitely check out our content in the nest
Yeah,
and
and,
our
and pop
channel.
something in the content in the
Yeah,
comments, guys. Pop onto the Discord and you can check stuff out and speak to the traders
exactly.
on there as well.
Exactly. So the point of control is always a take profit for me if I want to trade this, and the obvious liquidity levels. One
Mm-hmm.
is here, which is in line with the range mid, and another one is this high,
Mm-hmm.
because we want to assume that everybody who shorted this range.
Mm-hmm.
So I'm sure a lot of people shorted this, right?
Mm-hmm.
Their stop loss is here.
Yeah.
Okay, so I want to aim for that, uh, and yeah, this is the way that I look for my targets usually.
Mm-hmm.
Yeah, there's of course a lot more to it, but yeah, we're gonna reach there, I think.
Yeah, no. I,
Yeah,
I really like that, and I think often with trading, right, it's about keeping things simple. You want to have a really, really broad knowledge of the markets and a broad knowledge of trading, but it's very important to understand the type of trader you are, the environment that suits your trading. Yeah. So, for example, you have a lot of people come to me saying they really want to learn scalping, right, or day trading. Yeah, they've got a demanding 9 to 5 job, family at home, bits and pieces that are going to keep them away from the charts. So in those situations, it makes a lot more sense to look into swing trading, also, learning about investing, right? Now, if you have got the time to see at the charts, or if, scalp trading is just something that really, really interests you and you're hoping to move on to it at a later stage, that's fine. But the understanding of how it works, the amount of time that you need to put into it, bits and pieces like that really need to be factored in. So, for me, I completely agree with everything you said. I think really, really clean targets. I'm very similar. I'm looking for deviations as well, like Razun is saying there. And the reason for that is because the way I look at it is if I'm institutional money, right, and or big money that wants to place big orders, you need really, really
yeah,
big. You need big buyers for big sellers for buyers, right? So Now, when we break out below that, you're going to, as you've got with your range breakout to the lows, you're going to trigger breakout traders who are thinking this thing's going shorter, right? You're triggering all the stop losses of the people that were long all the way back at the very beginning, the origin of the range.
Yeah,
Exactly.
yeah.
So what we're saying, to give this some context, guys, is that because it can seem counterintuitive. Let's say we've broken down the lows here, and a lot of people say to me, well, hang on, if we've just broken the lows and we've taken out all those stop losses, right? Those stop losses are all sell orders, right? Because we've entered, the people have entered a long position from the lows, meaning that your stop loss is the opposite. It's a sell order. And people say, well, hang on, if we're triggering loads of sell orders, surely that's just, going to increase the pressure to the downside. But actually, if you're an institution, if you're big money, right, then you need all of those sell orders to fill your buy orders. So you're almost looking at the way that the market's, in, for want of a better sense, being manipulated or being driven into that area to create the liquidity in order for expansive moves, in this case higher. And the exact opposite is true if we're looking at shorts, right? So if I just share my chart with you guys over here now, we can see that we've got our key levels. The next thing that I'm going to do here, talking to you all about our bias. So we've had this key reaction. We've said we've swept liquidity from the lows. Price is now looking to move higher. So our bias is saying, well, we're then looking, as Razun said, we're looking for clean highs to target, right? So I know there's a lot of them on the daily, but my first target would always be this, right? Because that's the key candle there. When we've taken up, price has gone above this. This makes sense as to where the next liquidity lies. And we'll look at this on the lower time frames now, moving into it as we start to look at triggers. So that becomes my target there. Now, the next thing to consider is what happens when the day opens, okay? So for me, I'm looking for my trigger mechanisms. It starts a lot around a break of structure. So what I'm going to add here is I'm going to add a few daily opens, okay? So here we have the daily open for there. So this is when we've established, we're in our early stages of our bullish bias here. So we're saying to ourselves, okay, if that's our daily open, let's mark these as we're on the way up. Now, what we want to see with these is I want to see price open, contract or pull back, right, in order to take a setup where then the break of structure to the upside gives me a trigger. So what we've done here, we've taken our liquidity sweep, taken these lows, the key, we've taken this low and closed back in the range. We're now saying price is showing us momentum, that it's looking for the upside. So we're going to focus here on this daily open, right? And I'm going to just drop us down to a 15-minute chart. So if we go back to the first of the daily opens, which is back here, what we're looking for, as we said, is we're looking for price to drop down. So the day has opened here. We had a small spike up. Price actions pulled back below the daily open. Then we want to look in this area here on our low time frames, yeah, for a break in structure and a move to the upside. Then we can find our triggers. Okay, so we've got the same situation here. So we're going to mark this box as well, and we're going to drop down onto a lower time frame, and we're going to check. Now, the other thing that we want to consider here, guys, before we do that, is we want to look for targets, right? So if we want to enter down here, we're saying to ourselves, well, what's drawing price higher? We've got this inefficiency over here, and then we've got these highs over here. So there's two things I'm going to consider in terms of targets. One is the liquidity resting above these highs. So let's do this in a brighter color. Let's do this in blue. And the other thing that I want to consider is the order block. And let's do this in purple, all right? Now, we're going to mark up while we're on this time frame, this level here as well, because when we get this pullback, we still need high side targets over here, right? So what are we looking for? Same thing. I'm interested in the liquidity resting above these highs, or here as well, which are relative equal highs. But I'm also interested in the last up candle, which we've got here. All right. Make that a little bit bigger. Because we want to look at how price interacts when it gets there. Right? So we can see what we've done really clearly is we've got our bullish bias down here. We can also see that we've broken market structure here on the medium time frames to the upside. We've taken out this higher. Okay, we've got our structure break here. Now, I'm going to dive down onto the micro time frames. And let me just replay back to here for a moment. And now I'm going to show you what I'm looking for in terms of a trigger, okay? So I'm going to take this down onto a 1 minute chart. Now, if we remember about liquidity, what we want to see is we want to see a purge on liquidity, right? So we want to see price drawing down, convincing people or try and attract people into believing that the market is looking to go short. So what we can see here is below these lows, we've got a lot of liquidity. So if we mark up the extreme of that, we can see that price opens, purges back down. This gives us our indication that now if price is willing to move, we're then looking for a lower purge, which we get here, right? We take out those lows. Let's do that in red. And let me know, guys, if you can't see this, if it's not clear, or if you want it made any bigger. So remember, our bias is bullish. All we're looking for are bullish setups. We're waiting for liquidity purge, which has happened here, taken out the lows. Now what I'm looking for is I want to see price come above the high that's taken out the low. Yeah, so very traditional trading style. And what I call this, although this is just a made-up term that I call it, it's basically a breakout. So I call this the breaker line. And what I'm looking for my entry here is I'm looking for price to have an impulsive move higher. That means that this one here doesn't really count, it's a little bit up. This move where you see the impetus, that's then when I trigger my limit order on the breaker line. My stop loss goes under the swing low. And then on the way up, very similar to like what Razor's describing, yeah, I'm looking for clean targets. So as we're going up, we've got our targets, yeah. We've got up here, which is the level, yeah, that we said there, the naked highs, that's where we might get some kind of reversal. And this is the order block. So I want to be conservative, right? And I want to target the order block first because I want to see how price reacts when it gets there. If we start getting breakdowns and we start really dropping in market structure on the medium time frames, then I'm out. The other thing that I'm definitely going to take into consideration here on the micros is this. Yeah, so I just want to see how price reacts when it gets to here as well. And what we can see is we have this big move through it, right? That's given us encouragement that the market is still looking to go long. Now, I'm going to just drop back to the 15-minute chart for a second so that we can pop off of replay mode or extend replay mode forward a bit, actually. Oh, no, we can't do that. Can we get to top it off here? So now, obviously, we can see the data, so it allows us to cherry pick here, right? But what we can see is that price grinds its way up. Now, it comes into the order block here. Now, I would be closing down this trade. I'd be taking heavy profit here at the order block, right? And then I'd be closing down the trade when we break structure to the downside. Now, we can see with the power of hindsight that we get this nice reversal back up to the upside. That doesn't bother me. I'm happy to book good profits down here. We've got a 9R trade. It doesn't always have to be a 9R trade, guys. Take the key and easy options, right? Henceforth, don't always hold out for liquidity at the highs. If you've got an order block here, you can trim some profits when you get up to there. We see this reaction at the order block and price starts to break down. So that's what gives us our allowance. Now, if I just jump into this one very quickly before I pass you over to Resume, this has exactly the same principle. So remember how we looked, yeah, and how we found our high time frame bias. The same thing applies here. We're waiting for the day to open. We're waiting for our pullback. We want our break of structure. And then from there, that's where we're going to look to execute actively. Yeah. So what have we got here? We want to see we've got the daily open here. Price comes up. What do we want to see? We want to see price take out some lows. What do we get here? We get the lows taken out. Then we're saying to ourselves, okay, do we get another sweep? Ideally, we want to see another sweep in order to set us up, okay? And that's what we get here. Let me just zoom in a little bit. Now, here's the high that sweeps the low. So as I said before, we want to see an impulsive move higher, which we get here. So see this impulse move, see the way that price punches through. And that's what ICT, for example, would refer to as displacement, right? And you want to see that powerful move through a level. As that pops through, yeah, That's when we're confident. We're saying to ourselves, okay, we can place our limit order in here. That's where we take our long position, and we're looking to trade it to the upside. Now, of course, you can get caught on the wrong side of these moves. You know, we're putting our stop loss below the swing low here. We see it comes back, gets very close. For me, if we take this stop loss out here, the market's not ready to move yet, and we purge lower, my bias doesn't change because it's a high time frame bias. So I'm then looking at how I can then re-enter the market. All right. So let me just take this back to a 15-minute chart for a second. And we'll take this off of replay mode. And as we can see here, pop it onto a 5-minute actually so you guys can see that a bit clearer. Our stop loss remained intact here, although, you know, it can certainly test your patience at sometimes, as you often get these extended corrections into the level. And then when price is ready to move, you often get these big impulsive moves higher. And once again, we're looking for low-hanging fruit. Like Razun said very well, look left on your charts, guys. We've not got anything over here, right? So for me, I'm saying, well, the most likely target is this order block. And once again, we come up, we take profits of the order block, we break down here, we look to close out larger portions of the trade. A key point for me is making sure that my stop loss is always taken back to entry. Yeah. And again, you know, not we can see the data, right? Not that they're cherry picked trades. This is a 10R trade. You don't need to be getting these kind of R's on trades, guys. Again, when you get to a level, a sensible level, look to trim some profit and book some profit, all right? Even if this whole trade here, your stop loss was all the way down here, and this was just a 4R trade, right? Or a 2R trade, go for the easy target, yeah? Because if you looked here and you'd been holding for this liquidity or this liquidity, you would have found price break right down and you'd still be kind of getting held up in all this chop. All right. So once again, in terms of what we're looking for targets, I'm looking for price to sweep the lows. And we can even use an example on here. If we were to look at this, here's our sweep of the lows. Here's the high that sweeps the low. This becomes our breaker line or our entry line. We want to see an impulsive move away from that. And then we trigger a limit order on that with our stop loss under the prior swing. And you can use this on different time frames as well, okay? With price being fractal, you sometimes enter on a 5-minute, a 10-minute, a 15-minute. Just make sure that you've got confluence and the right setup from the high time frames. So that's me finished with my ramble about how I'm using my triggers. Again, guys, come and grab me in the Discord, Twitter. We're always discussing these things in Discord. We've got our private channels. We've got all the bits and pieces, our triggers, our trades that we put out every day. So do come along, have a chat with us, and you've always got access to the trading team. All right. But for now, I'm going to hold you over. I'm going to pass you over, in fact, to my very good co-host and friend, Razun. Here you go, buddy. Let's get your stream lined up.
Yeah. Okay. So the thing is, our styles are just so similar. Okay.
Mm-hmm.
And yeah, as you said, and as I said at the beginning, I like to watch the more data a little bit. So I'm gonna go like this. So what I'm basically looking for on the markets is I want to see uh, I want to see ranges, okay, everywhere. So if I'm watching the price here, so this is my range, and the so I'm showing you this right now, okay, on 4 hour time frame. If we zoom back, we get the range that I showed at the beginning, right? This range, but we're gonna go zoom into the chart to get some triggers, right? So the next thing I want to take into the consideration is that uh, have we grabbed the liquidity or not? Okay,
Mm-hmm.
so what this does is actually it it doesn't let me to get trades, for example, here and trapped and get
Mm-hmm.
trapped. Okay, and and the other thing is I do I do basically nothing in these type of situations when the market is choppy, right?
Mm-hmm.
So this actually is is like helping me in a lot of ways, even mentally, okay, because I don't really open a position here and wait for I don't know how many days, like 4 days here to see my position is still break even. Okay, so But when I see a liquidity grab, I like to I the market gets interesting for me. Okay,
Hmm.
and the liquidity grab here is just is so interesting because we like swing failure these two lows. Okay,
Hmm.
this one and this one, this is also an SFV, right? And when this happens, when I see this on higher time frames, for example, if you're a scalping, H4 is like the higher time frame for you, right? So I go like I go lower a little bit, and so we've got like these massive weeks on Bybit chart, uh, yeah, like because of liquidity reasons. But I think they're not on other exchanges. We
No,
just
no,
forget
yeah.
them for here, right? And uh, as you explained, after the liquidity grab, I just want to jump into a position, right?
Hmm.
So the next thing that I want to like pay attention, and I want to take into consideration is this market structure, right?
Hmm.
So, and if you see the price, this is the obvious bearish market structure. Okay,
Hmm.
so like you can see it's also a beautiful trend line, but I don't really use trend lines for market. But when I see the break of a structure, I want I want to get triggers to enter into a long, right?
Hmm.
The same goes for the short as well. I'm sure we're
Hmm.
gonna bring you like more examples. Uh, but the thing is, right here, okay, we didn't really get any triggers for a swing trade, because like time frame is so important on our charts, I think, because a lot of things will change when you zoom in and zoom out to the charts, and I think this is what people should really like master if they wanna trade, uh, get scalps and swings basically.
Hmm.
And uh, for me, 1 hour is like a time frame for my swings. Okay,
Hmm.
but there are a lot of scalp opportunities here, which we're gonna cover. Okay,
Hmm.
so one pattern that I really look for is what you basically like explained, and be beautifully, to be honest. Yeah, no one can explain it that easy, in my opinion. You're great at it, okay? But yeah, so we wait for market, we wait for a range, right? This is my range, which is formed, right? Then if we're looking for a line, we wait for a deviation or a liquidity grab or swing failure of that low. Okay. Then we wait for a break of a structure. And from here, this retest, okay, this retest for me is a long position. Okay.
Hmm.
So I don't really want to complicate it and say like there are a lot of names to it. I'm sure you know the Quasimodo. I'm not sure even if
Yes.
I'm pronouncing it right. But basically what it is, and there are a lot of things people are actually like naming a lot of things. Another thing is what power of three, right?
Hmm.
But
Yeah.
I
Yeah.
don't really want to make things complicated here. But the thing is, like there's a lot to this swing failure here, okay? But uh, we're not going to explain it here because it's gonna take a lot. But uh, think of it this way: uh, I want to catch a strong moves, right? And for a move to be a strong, we need liquidity. Why? Because we need bigger players to be on our side, right? So, and the bigger players basically need liquidity to fill their positions. So I like to assume whenever there is a liquidity grab in market, and I'm trading with the bigger players,
Mm-hmm.
market makers, or anything you want to name it. But so when this happens, I want to assume that a lot of people got stopped out here in this low, and a
Mm-hmm.
lot of people also shorted because of the like classic technical analysis, SR Philip, right?
Mm-hmm.
But uh, right here, when the market is here, I want to assume that a lot of bigger players just fill their positions here, and now I want to just jump into their side, and
Mm-hmm.
their side currently is long, right? So every single like uh, uh, retrace here is a long trigger for me, okay?
Mm-hmm.
And this is basically what I'm looking for. As I said, a lot of people are just using it and like naming it a lot of different stuff. I don't want to really like
Mm-hmm.
yeah. So and if you look at here, this is our range. This is our range low, right? And this is our range high. Okay.
Mm-hmm.
This is liquidity graph. So I want to name it like SFE, right? Swing failure pattern. And this is our break of structure, right? So as I said, as I explained, this retrace here is a long entry for me.
Mm-hmm.
Okay. Now, uh, did I just want to make things like uh, simple for myself,
Mm-hmm.
because if you really complicate things on 15-minute time frame, you're gonna like I'm like this. I'm gonna like miss the flow of the market. Okay,
Mm-hmm.
and so I made up. I made something for myself, which is the Fibonacci retracement for me.
Mm-hmm.
And a lot of people use like I know you use order blocks and fair value gaps,
Mm-hmm.
which and the thing is like 90% of the time they are all aligned,
They
like,
line
right?
up, right? They line up,
Yeah,
don't they,
yeah,
with the fibs?
exactly. So I use the Fibonacci. So I don't, as I said, I don't really take this week to
Mhm.
consideration. I just
Exactly,
assume
and
that
that's because
highs.
it's not
Yeah.
consistent, guys, over different exchanges. If it's a liquidity issue with a specific exchange at a certain time, and we're both huge fans of Bybit, right? Any exchange can come into liquidity issues. But if you see big wicks like that, check different exchanges. If it's not consistent across all of them, they can really mess up your TA, right? So, like Razor said earlier, make sure you're looking on different exchanges to get confluence, okay?
Mhm. Yeah, exactly. So basically this is my trigger for my long position, and you see how we like top down the market and just went into the 15 minutes and like
Hmm.
find a long entry. But another thing is a stop loss. So uh, a stop loss like 99% of the time is the previous low for me.
Hmm. Yep.
And I usually like choose the second one, as I said on our other webinar, right?
Hmm.
So
Yeah,
this
so
is
the
this is the
second swing
first
low,
low.
sorry. Yeah. Yeah.
Exactly, this is the first low after the move, and
Hmm.
this is the second one. So I like 99% of the time I choose just this one, the second one, because I
Hmm.
want it to be safe. A lot of people on Twitter, you see, like they have positions like this,
Hmm.
which I don't really know. I don't really think
No,
like they're
I mean,
accurate. But
the
yeah,
risk that you bring into a situation like that, right, Razoon, is that if it's great, you get a bigger upside, but you're going to get stopped out a lot more, right? So your win rate will
yeah,
be a lot
yeah,
lower, but your risk to reward
a
is high.
lot lower actually.
Yeah,
Yeah,
a
yeah,
lot lower.
exactly. But and this is really not realistic in my opinion,
Hmm.
because we have a lot of experience on lower time frames and
Hmm.
like things like this. I just don't really think it's realistic, because if you give me like 10 of these positions, I'm gonna be a millionaire, right?
Yeah, and also you'll get stopped out in 8 or 9 of them, right? So, like you say, unless
Exactly.
you're really jumping into the micros and you've got such a deep understanding of microstructure, right, which is where you see some of the very best traders are picking up these big risk to reward trades. Unless you're
Mhm.
doing that, you got to remember as well, crypto is very volatile. You're not trading forex, you're not trading legacy markets, right? So you can have, I mean, look at the wicks on this chart, just for example, right? Look at the size of those wicks. You can get those moves. So what Razun is doing is he's kind of erring on the side of caution and saying, you know what? It's better for me to reduce my R, but give myself a high probability win than it is to
Hmm.
constantly try and squeeze too much out of the market, because psychologically it takes a toll as well, right? If you're someone that can take a lot of these hits, I mean, Pedro, for example, Pedma7,
Yeah,
unbelievable, builds these algo systems that have unbelievable risk to reward ratios, but sometimes have win rates in the 30, 40%. But if you're
exactly.
executing trades manually, you've got to be saying to yourself, you've got to have the mental fortitude, right, to take so many losses,
Yeah,
knowing that over time your strategy plays out. And for someone like me, and I imagine it's the same for you, I'll prefer to reduce my R but have a higher win rate, because psychologically it puts me in a better frame of mind, right?
exactly. Yeah, yeah. The psychological logical part is just so important in my opinion, because like what Pedro is doing is building a bot
Mm-hmm.
which has no emotions. But I don't think, if like I'm talking about myself, right?
Mm-hmm.
If I can handle like 10 losses in a row and
Mm-hmm.
having like 10% win rate, if
Mm-hmm.
and trying to get like 20 hours from
Mm-hmm.
market. Okay, so I like you said, I put my stop loss below the second low. Okay,
Mm-hmm.
not this one, but here.
Mm-hmm.
And in terms of targets, um so uh as I said, my first usually first target is the obvious one, which is
Yeah.
this one, this high, and you can see how beautifully like market tapped into it,
Mm-hmm.
which was actually expected, right?
Mm-hmm.
Because because a lot of people who shorted here, which I promise you that there were a lot.
Mm.
Okay, just put their stop loss above here, and
Yeah.
this swing failure here just confirms it, right?
Mm-hmm.
So but my uh, what I usually do for my targets, and I really like to do, is I find the as I said at the beginning, I look at the markets as ranges, right?
Mm-hmm.
So this is a range for me, a small one, but it is, right. This
Mm-hmm.
is a range for me as well, and all these is small ones. And as I said, time frame is so important. Okay,
Mm-hmm.
I don't really want to, for example, look at this is small one a range, but if you zoom in, it is a beautiful range, right?
Mm-hmm.
So, and uh, a lot of you use order blocks, you draw a beautiful block. I think it was this one, right? If we zoom out.
Yeah.
Yeah, okay. So uh, the the ranges are so important for me. Let me actually draw it so people understand like what range I'm talking about. This is range. Okay. So let me just, okay. So the ranges are important for me. Okay.
Mm-hmm.
This is a range for me, and this one is a range as well. But
Mm-hmm.
this is like a what like for about 4% area, and like
Nice.
it's so different if you close your position here or here or
Mm-hmm.
here, because we are scalping, right?
Mm-hmm.
So what I like to do is I like to find the definition for my order blocks, because order blocks are just supply and demand levels, right?
Mm-hmm.
So we
100%.
like
Yeah.
to assume that this level, this blue level right here, okay, was the level that market like distributed, right?
Mm-hmm.
But when we're talking about that, one thing that is important is the range volume, right? So
Mm-hmm.
we like to assume that this range here, this zone here, was a zone that market distributed and just like moved down, right? So when the market like looks like this, I the volume profile of this range just I'm just interested in.
Mm-hmm.
Okay, and the the value area, okay, this value area high and low. Okay,
Mhm.
I like to mark this as my order block.
Mhm.
Why? Because the bigger volume like is traded in the value area.
Mhm.
Okay,
Mhm.
so the because to be honest, like the I want for it to make sense for me. Okay,
Mhm.
and the volume never lies, right?
Mhm.
So I'm sure that here the biggest amount of volume has been traded. So
Mhm.
I mark this, but I like mark the levels. Okay, I just don't mark the zone. So this is the value area high.
Mhm.
This is the point of control.
Mhm.
Okay, and this is the value area low.
Mhm.
Okay, so this is like depends on the market. Okay, this depends on how you wanna close your trade. I'm going to long here. Okay, stop loss here, and I usually target the value area, the point of control. Okay,
Mhm.
so this is like a beautiful like 4.5 position for me.
Mhm.
Okay, and like I just explained how I like to mark my order blocks, and I use
Mhm.
volume profile for that. I don't really see a lot of traders do that, but
Mhm.
there are obviously a lot because market is not usually ranging this beautiful, right?
Mhm.
So yeah, I'm working on a lot of contents and writings about that. People can find it on our
I
Discord,
Do you
obviously,
know
but
what I like it as well, Razor? Because like we talked about before, it's amazing when you and I sit down and we look at charts, right? And very very often our levels are really really close, very similar to Bast as well, right?
exactly,
When we're looking for
exactly.
those, and when we're looking for those kind of like inner range, outer range, or however you want to look at the targets, whether I'm drawing order blocks, you're using volume. I know Bast uses a little bit of a mixture of both as well. It's amazing how often these levels have confluence, right? So like where you've got your range there, you can see the point of control, the orange line, is sat very, very close to that range EQ, right? The 50% line. And now when we're stepping back into that range, and as the wonderful trader Dank said on his stream when he came on with us, right, is when you step back into that range, your targets then become the midline, your EQ, and then the range high. Or
Exactly.
the mid range and the range low if you're shorting, right? And again, you've got a mid range there offering perfect confluence. You've got the point of control offering perfect confluence as well. So all of a sudden, it gives you the confidence, doesn't it, in the trade to hold it through to that place. Price very rarely, unless you have an impacting news event, price very rarely just drops out of thin air, right? It's making its way towards levels in order to find liquidity, like Razun said earlier, and like we've touched upon before, to fill larger orders, right? That's the way that I certainly look at the market. I say to myself, and I've got a brilliantly awful analogy that I share with my mentoring students, right, which will attest to how terrible my my analogies are. But I think of it like a fueling station, right? So where we've got that
Mm,
deviation, where Razun is talking about price coming into, the way I'm looking at it is, if you're coming into that area, if there's enough fuel there, right, it means that you're going to be able to fuel up enough and reach your destination. Yeah, we always make an allowance for an interim target because maybe there isn't quite enough fuel there and we need to find some on the way. However, if we fuel up and we take off and we have to immediately return, we know there's not enough in there. So very, very similar to when we're breaking out, if we look at the lows that Razun's got marked up, now if we were to lose that level, break down below it, retest it, draw on liquidity and start to break down, it gives us a higher probability then that we say, okay, the market's ready to trade the other way. However, I think we're both similar in this respect. When we come into a swing fail, a deviation, a liquidity sweep, we're
exactly.
immediately thinking that the market is going to fuel to the opposite direction. If we're wrong, we're in a position where we get to flip bias very quickly because we're trading at the extremities. And as Razun also talked about, we're not taking the trades in the middle of nowhere, right? We're not looking to take
Mhm.
these trades as we're
And
approaching.
that's a big deal, right? That's a super big, because we don't want to just watch the price like going up and down for like a whole day on 5 minutes, right?
Mm-hmm,
That's really changed the way that I trade, because I
mm-hmm,
used to put a lot of time and effort on the markets watching the price on 1 minute, right?
mm-hmm,
But it really helps me to find the areas that I'm interested in. Okay,
mm-hmm,
and and sometimes I just don't get the entry, right?
Mhm.
And
Yeah.
I'm totally fine with that, because I know that, if you have the consistency with your system and to your trades, you're
Mhm.
gonna eventually make it, right?
Yeah, and I think that's a really, really good point as well. And as we're starting to wrap this session up now, everyone. I hope you found it really, really useful in terms of triggers, and also a little bit more in there about a little bit of volume as well that we've brought in, as well as kind of how we're looking to secure a high time frame bias. And again, before I go on to our closing points, if you've got any questions about this, please do come and find us in the Discord. Come and ask questions. Come and check us out. Come and speak to the trading team. Come and speak to the amazing community that have been part of what we're doing for a while, because we're all here. We're all here to build and foster education, all here to improve, right? So before I just get on to our closing points, Razun's brought a really good point up there, and we're both going to leave you with a little golden, not a golden ticket, but a little kind of a little gem, we would call it, if you like, just a little something, a golden tip, right? And before I go into that, and I hope I'm not stealing yours here, Razor, but I think it's such a good point that you just made, is around patience, right? Now, trading's exciting. Everybody wants to trade. And I see a lot of people make the mistake of opening the charts, diving straight in, forgetting to kind of do your top down, really get a feel for where the market might be heading. And they run into a chart on a 15-minute, a 5-minute. They see a liquidity sweep, or they see a change in market structure, and they're running in to enter these positions, right? Now, like Razun said, you can sit there sometimes and monitor these positions for excessive amounts of time. Price comes into it, flies away, and you don't get your entry. You never, ever, ever want to FOMO in those situations, right? If you miss the opportunity, congratulate yourself on the TA. Look, the reward in terms of finance from trading is purely a byproduct of having successful strategies and executions, right? So congratulate yourself for the TA being right. If it starts to become consistent, then start to review it and see if there's anything that's consistently coming up in your journaling that you want to change. But that nod towards patience for me is absolutely key. So I'm going to leave you with my thought in terms of what I would consider a golden tip, or just a little bit of advice really from me, something that helped me a lot on my journey, which is to not lose sight of your high time frame bias. Right now, what you can see with me as I've just carried on with you, and I'll just share my screen again just very, very quickly and just pop this onto a slightly higher time frame here, not by much, but just by a little bit. Now, if we remember, we drew in the daily opens, right? So we've got the daily open here and we've got the daily open here. This was all played in from our high time frame bias. We got bullish down here. We had our medium time frame break of structure to the upside. We also had our high time frame liquidity grab, right? We took out the liquidity from the lows, so we start to target the highs. This becomes our second point of confluence, the market structure break to the upside. Then what we're waiting for is the next day's trading. And what I want to see is the daily open here, which we can see with this blue line. As we discussed, price trading down, this gives us our entry area or our zone, right? Within here, that's when we're looking for the low time frame breaks of structure, right? That's what gives us our entries. We're then doing exactly the same up here. And just one last thing. What then helps us stay out of trades is because we're still bullish here, right? We're still bullish here. But this is the daily open here, right? And let's just mark this up super quick because it's so important to retain your high time frame bias. So that's the daily open. Remember with these ones what we said, day opens, pushes down, pushes down. We find our entries here on the low time frame break of structure. We look for our liquidity grab and we trade up. This is the same. This day opens, right? We can see trades down, then it trades up. Our first warning sign that we might be facing a reversal or not getting the entries that we want is this, because this day opens, trades up, and then just trades down, right? So when we zoom in, right, here we've got our daily open. See, it doesn't give us any long setups. If we're still holding our long bias, we don't get any long setups until we sweep these lows and then take out these highs, right? In which case, we probably have a reasonable scalp trade on our hand. But the fact that we've got our high time frame bias in place allows us to not jump into trades, allows us to stay away from it being FOMO. And when we get a reversal and we get stopped out, then we've got a fairly high probability set up back in the other direction, all right? So Razor, My closing line, I suppose, is don't lose sight of your high time frame bias and make sure you're trading with that. What would you want to
Yeah.
leave the people with today, Razor?
Yeah. Great point. Actually, it's so important for people to have bias, because it's gonna make your life easier, right? At the
Hmm.
end of the day, it's just going towards simplicity, right? And what I want to like say here as golden tip maybe is having a plan for your trades, right?
Hmm.
Especially for trades that you're looking for and you're not really sure of anything. Okay, what I like to do is every like weekend, or I usually do it on Mondays, okay, because my time schedule is just more open on Mondays.
Hmm.
I just scan the market, okay, uh, just find the coins or like teachers assets that the price action is interesting for me, and
Hmm.
then when I'm reviewing them, I'm TAing them, I just make a plan for myself.
Hmm.
Okay, and for my plan, I have different steps. Okay, for example, as I like did in my top down analogy, right? I look for liquidity grab, then break of a structure, then
Hmm.
the retrace. Okay, and like maybe in a week, like three four one of them like gives me all the criteria that I want for a trade, and I just
Hmm.
take them. Okay, and that's and like I don't really get worried about them. Why?
Hmm.
Because I had the plan from days in advance, right?
Hmm.
And like it's all going to like help me is staying in the markets,
Hmm.
right? Because we all know with a lot of things like FTX happens, like 5 minute uh, 5 minute 20% dumps on the market, especially in crypto and
Hmm.
Bitcoin these days, like in the bear market. uh, Having a plan really helps me to uh, b- continue my career as a trader. To be
Hmm.
honest, it's like so important, more important than all these technical analysis that we just did in this webinar, right? Because as I said in our uh, webinar with Pedro, I know a lot of people who are actually profitable with one or with like two moving averages, right?
Hmm. Yeah,
So
yeah, yeah, definitely.
yeah, so what they do is they not really get worried about the market. They just they have a proper risk management. And by the way, about the risk management, we should like bring another workshop, I think, in my opinion.
Yeah, well, we had a
If
really,
you
really
are,
good one, didn't we? We had a really good one at the beginning of the show as well. So, for anyone that's really
yeah.
interested in that, please do go back and watch that workshop, guys. Please do go back. Remember that all the videos are available within the Discord, right? Go in there, make the most of the bits and pieces that are on there. Watch this one again if this has been of interest to you as well. Watch the other one that Resume's been involved in as well. If you've got interest in any bits and pieces that are on here, the chances are that they've been covered in other webinars as well throughout this. So,
Yeah, exactly.
just to leave you with this point, guys, because we've got to wrap it up, unfortunately. Couldn't agree with Rezoon more. There's an old saying that I learned up the city here in London, which is plan the trade and trade the plan, right? Which is exactly what Rezoom's playing. Don't just enter the markets blind. Make sure you've got a plan and a high time frame bias from me. And yeah, guys, I hope you found this interesting today. We're trying to cram in as much as we can for you as well. Some great people on as well. Hardeep, good friend of mine. Thank you so much for the comments. C. Ron, who has been an ever present throughout the whole of Congress so far. We've got Jediah, we've got Ali, we've got all these people that are on there today. Sorry if I've missed you all out, guys. Sultan, Hangry Patrick, MM, so many people commenting, so many people enjoying this. Thank you so much. Spraffers as well. Great to see you back on the stream. Do check this one out. It's going to be on recording, guys. Get yourself into the Discord. Enjoy it. Get yourself signed up to the newsletter as well. Tons of free alpha coming out. Lots of Black Friday offers as well. Here's the code as well. sneak it on there, get it down. The link is in the description, how you can go forward and how you can enter that and put yourself forward for some great prizes. All right, guys. So from me, BC Ritual, thank you so much for joining us all live. Razun, do you want to say goodnight to the folks? And then we're going to call
Yeah,
it.
thank you guys for tuning in, and definitely we're having more in the Discord. Just join us.
Absolutely right. Thank you so much, guys. Have a wonderful evening. Have a fantastic weekend. Stick with us through the weekend. We're rocking with you all the way through to close of Cyber Monday. All right. Take care, guys. Have a wonderful week. We look forward to seeing you soon.